So what is LFMD first? So this is for Mike, the dividend investor guy. This is a small cap. Man, I have been loving looking at small caps because I love making money. And making money on small caps, I think, is going to be, I think, a very high possibility with lower interest rates. So LifeMD operates as a direct-to-patient telehealth company that connects consumers and healthcare professionals for medical care in the United States. The company operates through two segments, telehealth and Work Simplify. The company offers telehealth platform comprising of RexMD, a men's telehealth brand that provides access to virtual medical treatments for a variety of men's health needs. Okay, we got that. So this is a little bit like HIMSS, where it's really focused on a couple of very typical health needs that men have. Okay, that makes sense. It's a small cap. The revenue's 245, so you're not even paying 2 times revenue. They lose a little bit of money, not terrible loser here. Analysts think it's really discounted. All right. Over the 1 year, this thing's up 25%. Year to date, it's up 37%. It's had a pretty good drop over the last 15 to 683. Am I reading that right? Yeah. Geez, that's a big drop since June 18th. So that's interesting. Let's take a look at their financials. What are their financials telling us here? Well, their revenue did slow down. And I've seen this with other businesses. We saw this with DSP. What other company? Catalyst Pharma, where revenue, was clicking along really nice, fast growth. And then it did grow, but the growth rate is even at a percentage perspective, it's less than half the percentage that we saw in the previous quarter. I think that's what scared investors. And when did they announce? They announced on August 5th. So investors have had to this point about 5-6 trading days to kind of process the news, so to speak. Now, this is concerning, but if you think that they're going to continue to grow, then this would be potentially a pretty good idea. Now, looking at their trailing 12 months, I'm going to look at gross margins to see how much money. Wow, these guys make a lot of money. 87%. Hello. That's a very, very good metric there. What that tells me is they get bigger, they just make more and more money because they get to keep most of the money from a gross margin perspective. Free cash flow, they are free cash flowing 17.89. They were negative cash flow for a while, but now they're positive cash flow. They continue to build their business. This is still a small business relative to some of these big giant companies like a CVS. They have plenty of addressable market to go after. So that looks good. They have free cash flow margin. That's going to improve because of this gross margin, in my opinion. So this stock, in my opinion, I mean, you can value it. Let me take a look at their balance sheet before I make a statement. I just want to make sure their balance sheet's okay. So balance sheet has cash of $36 million and $22 million of debt. So they have more cash than debt. Beautiful. That's what I want to see. And I think this is a very good idea. I like this idea. I think the company, if you believe in the company, I think as an investor, I would want to look at their earnings, their website, really get comfortable with this idea is going to work. If I think it's going to work, this business is worth like $600, $800 million in my mind. So this is a good idea, Mike. I like this idea. I'm going to start watching this stock. I'm going to analyze it, and I'm going to add it to my small cap watch list, but looks good. Now, let me turn it over to Daryl to see what the technicals are telling him.
It has stabilized since announcements. They're consolidating around that 661. Looks like they have support around 413 or so. 50 days declining, the 20 days declining. But if you're a believer, in the fundamentals in the company. This looks probably like it's a good place to start putting a toe in the water. I do
Yeah, I'm gonna.
see the PPO is negative, and it looks like it may be maybe closing down a little bit, but it's still very negative. The RSI is just out of overbought, oversold territory, sitting at 31. They're in a industry group that is underperforming the SPX, but they're outperforming their industry group, the healthcare group, and sitting right even with the SPY at the moment. Doesn't look too bad if you're willing to take a risk.
Yeah, and I'm scanning for. Let me come back to their website, and I think you know few people would argue with the statement that, hey, the market seems like it's expensive, especially these mega caps. And I can understand the mega caps getting so much interest, right? Because everybody knows Microsoft's a great business. Everybody knows that, the top 10 companies are great businesses. It's just, what should the right price be? Small caps are not quite as known, not even close to a Microsoft. So there's a lot of unknowns in a stock like this, which plays into our favor. If we do the homework and we get very familiar and establish a sense of either uh, confidence in the business, or we see that, no, this business is broken. I mean, this business is under threat. This business is getting, like, for example, I did a video on ad tech companies, and I showed how AppLovin is taking market share as the biggest company in the space, and the smaller companies are losing market share. They're not growing as fast as AppLovin. What shows that AppLovin is beating everybody else out. Well, that's a big risk to the small cap in ad tech. That's what we want to establish with LifeMD, is kind of look around their space, look at peers, and see, is the slowdown in growth percentage a trend that's going to continue for the next year, 2 years? Have they found, or is competition in their space that's going to make them less relevant, less successful? That'd be one homework item that we should be done on this stock. The other homework item is, did they announce something that is deemed to be bad news, and bad news that is changing the fundamentals of the business? Like, hey, we wanted to commercialize this drug that we've been working on. The FDA said no. And oh, darn, we just spent $50 million trying to do that. And we can't sell one unit of that. That's like, okay, that changes the valuation. Bad news that doesn't really matter to me is, hey, you know, some analyst said he doesn't like the company because, whatever, some insignificant issue. Okay, that wouldn't be a problem for me. So I'm not seeing any stories that they're announcing, and I'm going to take a quick look at the company, looking at them on Google Finance, and see, is Google Finance. So when you guys win, so these guys are GLP-1 companies, okay? So see, here's a negative outlook report from MarketBeat from this analyst. I'd probably want to read that and kind of get familiar with what are the points that this person's making. Is it rational? Like, do they make really good points, and not have like just a overly optimistic mindset when it comes to this company? It's kind of like, let's listen to what people are saying so that we can form a logical expectation on how they're going to do in their space. But I like the idea. I like that it's a small cap. I like their profitability a lot, the gross margins. I like their balance sheet. I don't like that their revenue has slowed so much. That is kind of a yellow flag, at best. It could be a red flag, like, hey, they are being stopped by the FDA or they're being stopped by competition potentially. So that is LifeMD for Mike, the dividend investor guy.